In this past Friday's Stock Talk, Bob from upstate New York brought up this Roth IRA that I had shown on a number of occasions that said that if you had invested in 2004 through 2024, equal amounts of $1,500 each year into Apple, Microsoft, Amazon, and Google, today you'd have $4,219,562. And I had said that if you could eliminate those yellow years, how it would be so much substantially greater. And the more I thought about that, the more I thought that's a mistake. Because the reality is you want those yellow years, because if in 2008 you put your $1,500 in and you were able to buy the shares at their high at $6.04 or at their low at $2.39, well, at $2.39 you're going to buy 2.5 times more shares. So really the opportunities year to year are to take advantage of those downturns and buy as many as you can at the lower price. And I put in this is an annual chart, and I put in a simple moving average of 5, which would be dividing 365 by 5. You've got a different barometer. So I said if you could follow that blue line and anticipate that this is going to be the low in 2014, it would be $16.05 as opposed to its high, which was $26.70. If you could predict that, you'd be better off. So as I looked at it, and as we got further along, you notice the range within the price gets bigger and bigger. But if you could anticipate as you went into 2020 that was going to come down and break that 5 moving average to 61.11, and you bought at that price as opposed to the high of 135.86, you would be much better off. So my message now, here we wouldn't get to the $90.72. It actually, the low was 113. But again, if we went into it with this knowledge and we could monitor it, again in the last 2 years, we'd be buying at 139 as opposed to 190 or 200. So this is my message to Bob, and the message to all of you is let's take advantage of the down years. Now, Apple, if I look at it here and say it's currently this blue line, my 5 moving average is at 172. If I project it forward, it's going to be probably somewhere around 200, and it's currently trading at what, 235. So I could go into 2025 with my Roth IRA and put in a 6-month or limit order at 200, and there's a good chance I'd get it. So Bob, disregard getting rid of those yellow years. Those yellow years are your opportunities to buy more shares and thus grow your portfolio at a greater rate every year. You're looking for, again, we have a 147 growth, but in that year, the high was 645 and the low was 236. So if I can anticipate, even in a good year, that the price is going to come down, that's where I need to buy it. So I will build a chart on all of my stocks that I follow and do an annual chart and follow that blue line. And then when I want, that will become my target price each year to buy on that blue line. And that's what you will see as my target price in 2025 for Apple, and every one of the other stocks because I've learned play into the movement and the history and the predictability of the stock. Now, the other thing I've got involved in is, let me take you here. This is the new cheat sheet that will be appearing in the next couple weeks. And what I'm doing is taking that knowledge, and you will see it showing up on the target price on Apple and every other one, because I'm going to make a similar chart on every other one of these stocks. But then what I decided I wanted to do was use past history on each one of these stocks to give me a better projection on what the price of the stock will be. And let's look at Apple again. And what I've done here is I've taken their history from all the way back, let's see, how far back do I go, to 2005, and I've recorded all of these numerics, like their revenue, their change in revenue, their net income, their change in net income, their earnings per share growth, their PE ratio, their price, and then their PEG ratio. And what I want you to notice here, some things leaped out at me here. Anytime I see these yellow brackets, that's showing from 2022 to 2023, the revenues for Apple went down. They went down 2.8%. Their income went down 2.89%. Their earnings per share growth was only at 0.16. In anticipation of this, the stock went down the year before by 11%. I come back and I look at 2029, and I see a similar pattern. The earnings or the revenues went down 2.08%. The net income went down 7.7%. The earnings per share went down 0.33%, and the stock anticipated that in 2018 and went down 7%. The same thing happened in 2016. The stock is anticipating what is going to happen the next year, and it's reflected in the stock price of the current year. So I can take this kind of information, and let me show you what I've done with it. What I've done is then I've taken the projections that I'm able to get from Apple and the Wall Street, and I'm putting in what their anticipated growth rate in the revenues. I've done the same thing in their income. I've done the same thing on their earnings per share growth and their price, then interpreted it into their price and anticipating what the price of the stock will be in the future. And so you can see in 2024, I'm anticipating a price of $221. And what I'm using, I'm taking their average PE ratio for the last 3 years, and I'm projecting it across here. And then I'm taking their earnings per share growth, which they share with me in a data source, and I'm multiplying them out, and I'm anticipating what the price of the stock will be in the future. So I'm using this. And then the other thing I'm showing down here is the PEG ratio. What a PEG ratio tells you is that the stock is either properly priced or overpriced. And it is reflected then in what happens the next year. So in 2023, the price is $234 with a PEG ratio of 4.4. In 2024, the price comes down to $221 with a PEG ratio of 3.8. And we're anticipating that PEG ratio will come down year going forward and get closer to where we want it, and that is a 1. And that's how we predict the price of the stock as we move forward. And as you can see, where I'm anticipating a decrease in price in 2028. So this is what I'm going to do with each and every one of my stocks. And you're going to see that I will reflect that in the future on my cheat sheet. And you'll see I've only done it thus far for Apple. And there's our target price, as I said, for $200. And that is going to be based on the range that history tells us that Apple will trade in next year in 2025. But I'm expecting the price to be at the end of 2025, $241, which is not that much more than what it is today at $235. And at the end of 2026, it'll be $309. Now, is it fair to say that's what the price will be and you can count on it? No. That's what I believe the fair price of Apple will be based on its past history, its past performance, and its future projections. And I will do that on my cheat sheet, and you will have access to it for our program, which goes, I believe now, for $19.99. So I will do the work. I will use my algorithms and my access to data, which is what I just showed you, and I'll show you what it ends up looking like when I first get it. That's Amazon's, that's all its data. I will then plug the numbers in and give me the ability to project forward like I did on Apple here, and give you a better understanding of what is the stock worth today. Is it fair priced? Look to the PEG ratio to see that. If it's above 1, it's a little overpriced. If it gets up to here, 128, that's telling you that that stock is way overpriced, and it's coming down as it did in 2024. It came down from 146 to 128. So that's how I'm analyzing stocks as I'm getting more access to more data and as I inject AI into it. So that's what I'm doing on my Sunday. I don't know what you're doing on your Sunday. And part of that is because Alabama didn't do all that well against Tennessee yesterday. So I hope that's of help to you. I hope you see the value that Best of Us Investors is bringing. Be above and beyond that, we have a fabulous swing trading program that gives you phenomenal results. Take a look at that. Go to the website, Best of Us Investors. Read some of the articles under the free stuff that I'm doing that I think can give you some more insights into how to invest to make money in the future. Talk to you again later this week.